Hey guys, welcome. Um, all right, I just want to share. I just want to share something with you. It's a candlestick formation, and I've not seen it in a little while, but I've just seen it on. I've just seen it on the Kiwi, and that's got me very interested in going long on Kiwi. Pretty much at market, right? So the price is here at 82.22. I'm actually yeah. So pretty much at market, I'll be looking for a long here, and not risking very much. Risking maybe around about 10 pips, 15 pips at most. So if the price drops down to about 82.10, then exit the trade. It's going to be a quick intraday scalp, and it's based off of a pattern which has formed on the hourly, and it's one of those that when you see the formation, you just got to take your chances, right? But I call it three spikes, and so we're looking at the hourly, and if we look at the last three candles, we've got some fairly heavy wicks on those candles, and so we've got three spiking candles. So I'll show you 1, 2, 3, and my expectation is that usually when you see this kind of formation, more often than not, you actually get quite a strong follow through, right? So the next two, within the next 1 or 2 candles, the price will actually break higher, and it will breach the high of that highest wick, and then we should see momentum continuing to the north for at least the next 2 or 3 hours, right? So if I take this trade, I'll be looking to hold it for the balance of the day. I mean, we're about an hour away from London closing, so I'd probably hold it into the tail end of the New York session, right? And just look for a continuation higher, right? Now, so that's the formation on Kiwi. Looking for a long, it's going to be a considered position, and just looking for a long, risking 10 pips, right? So nothing amazing being risked to get into that trade. We don't want to see the low of the last hourly candle breached, right? So I think the last hourly candle made a low at around about 82.17 or something, right? And we don't really want to see the low of that breached. We want to see the price remain above there, and as long as the price remains above there, we can be quite confident that we're going to get a break north. If we see the price breaching below there, then it may not even be worth risking 10 pips, right? So you could potentially close it early for 4 or 5, right? Now, it's been a little bit of a while since I've seen this structure, and I'm just going to show you what happened the last time when I saw this. So I keep a pattern book, and I keep any structures which strike me, whether they're to do with formations or whether they're built around 1, 2, or 3 candlesticks, it doesn't matter. This is a chart which I've had in my pattern book for more than a couple of years now, and it's probably the first time I'm using it, right? But when I saw that on Kiwi, I thought, it looked a little bit familiar, and I thought, let me just have a look through in terms of what the expectation would be when you get that type of structure. This was taken from Euro USD, and like I mentioned, it's a couple of years ago, back in the day when Euro USD used to hang quite comfortably in the 144-45 range. So you can imagine how long it is. But if you're looking at the price structure here, you're seeing 3 spiky candles, 1, 2, 3, and then the 4th candle did not breach that low, right? It did not breach the low of the 3rd candle. Instead, it just went zoom, straight up, broke through the highs, and if we're actually looking, it carried on for 1, 2, 3, 4, almost 4 or 5 hours before that momentum extinguished, right? So looking at Kiwi, I'm looking for something quite similar to take place, using this candlestick formation to put me in that trade, going north. And like I said, it's a good one because it really is risking practically nothing. And if we're considering that we're going to get a break of the high, from here. That's 20 pips at least, and if it breaks the high, it'll do another 20 pips. So you're looking at grabbing maybe 50-60 pips in the process, right, in the space of a couple of hours. Like I said, it all really does depend. We don't want to see price slip below 82.17. If it does, we'll be in trouble. But otherwise, I think it's quite an interesting formation, which could get us into a low risk trade. It's just quarter past the hour now, so this that first candle has another 45 minutes to prove itself. So we'll come back and see how that develops toward the London close. Okay, guys, thanks for attending, and I'll catch up with you.